Good afternoon, everybody. Welcome to 12-Minute Trading. My name is Doc Severson. Today is November 3rd of 2025. We have hit the next month. I am joined here today by Dave Lukas of 12-Minute Trading. And for the next 30 minutes or so, we're going to be talking markets, what we see, what's going on. We've got a lot moving on right now, and it's weird. It's like we're in this sort of condition where we certainly have trend to the upside, but we're waiting. I think everybody's waiting for some kind of like something bad to happen. And when that typically when we get into conditions like that, we do climb the wall of worry. However, that's not happening with the crypto market right now. The crypto market's starting to trend in the opposite direction. So many things we'll talk about, Dave. What are you seeing out there?
Uh, Same thing. It's these are tougher markets because they lull you to sleep, and then usually something comes out of nowhere. But like you and I were talking about, and we'll show it here in a little bit. The monthly chart energy is like the lowest in 5 years. Like so, at some point that's going to come into play, but it's a monthly chart, so it can take a couple months before it shows up. So. I'm still sticking with my call that we've got a nice run into the end of the year. Seasonality suggests that there's no real headwinds, at least as of now, right? It's always going to be something that comes out of nowhere that changes things, but as of now, there's no real major headwinds. I mean, we may chop around. We could have one of those one-day wonders like we had a couple weeks ago, where the
Mm-hmm.
S&P dropped 180 points in a day and it recovers the next day type thing. We could have something like that. But I think overall, we see 7,000 on it on the S&P by the end of the year. I just think that's where we're at. Right now, we're flagging out, chopping around in a small range while we charge back up on the shorter time frames to get running and off to the races again.
I mean, there's a distinct lack of catalysts that are out there right now because
Mhm.
earnings last week we had already reported. Last week was 43% of the S&P
Yep.
reported last week,
And
and
85% are beating their numbers.
yeah, and as of this week we have some kind of tier two earnings going on. Like that we have the McDonald's of the world and the Disney's and stuff like that. But once we get past that, it's kind of barren, apart from an
Yep.
occasional Nvidia, coming along in a couple of weeks, those
Yeah.
kind of things. I mean, there's just no catalyst. I mean, we even have a jobs report this Friday, but who knows if that's going to get reported or not.
Yeah.
So,
Well, that's the only other, I guess, wild card would be this government shutdown. I think it'll be resolved before Thanksgiving. We talked about this last week. If the biggest travel day of the year, I think this week's election week, or this week's tomorrow's election day. Not a major election, but it is in certain areas, right? New governor in Virginia. Obviously, everybody's watching the New York mayor race, things like that. I don't think those are enough to move markets substantially because they're more isolated and pocketed. But and I'm thinking after this week is when this whole government thing gets put to rest. It's just the maybe the reason was to energize voters to get out. I don't know, but the I think they'll come to something before the travel begins for the Thanksgiving holiday with the way that the airport's already backing up and things like that. I just don't think anybody wants the screaming end of that from the American public as things get worse, we get closer. So that could get resolved. That market's gonna be fine with that. Black Friday, traditionally has been pretty good the last however many years. So I think you're right. Like, what's in the way right now? Now, I guess maybe the other thing is we do reopen the government and we get this flood of data and it's all bad. I mean, like, could it be that? I don't necessarily see that happening either. So that's what I'm saying. I think we are seasonally wise, just run to the end of the year, and then as you get into 26, the first quarter is when you get your big massive corrective, you know, nastiness, and then you're off and running through the election at that point again.
so Dave, the what was the report that came out like 2 weeks ago that came in really good? Was that CPI?
Yeah, yeah,
Now,
inflation.
now, how did that number get generated?
They released it. So they said they were going to release that report. And I
Yeah,
don't
but who
know.
who did it? I mean, isn't it the bureau? It's not.
Yeah.
labor statistics. I mean,
Yeah.
I mean, is was it like somebody working
It's
pro bono or?
I'd have to look. Probably our audience may know who releases that. But there's whatever area of the government put that out. Now that's, I guess, a privilege of the party in power, right? Hey, this is a really good number. It looks really favorably. Let's get it out there before the Fed, you know.
Right. So
Maybe.
which begs my question. Like, if the jobs number, if whoever tallies that, well, it's got to
Mhm.
be the BLS that tallies
Yeah.
the jobs number because they just
Yeah.
fired the person that was doing it before.
Right.
But if that's a good number, I mean, the administration's going to want to get that out there one way
Hmm.
or the other.
Yeah, and I don't know because remember, all of the if you remember the beginning of the year, there were all these what was it called? Voluntary like like leaving the government, and they gave them a buyout of like
Oh,
eight
sure.
months or whatever
Yeah.
it was.
Voluntary
So all of
termination.
those people would have started hitting the unemployment rolls over the last 2 months
Mm.
or so, right? So maybe that impacts the employment numbers, so they're lower. But again, that would only give the Fed more reason to cut, which the market would like. So yeah, I just think we have to go through this like kind of period of just being tired and sideways and just, getting ready to run again and then take off. So you bring up the charts, we can show
I have a Labrador having a bad dream right now, so
them.
it's
I
okay.
don't hear them.
It's okay, buddy.
So
Um, yeah, I do.
anybody who's got pups out there knows what that's like when they have their
Yeah,
dreams.
they have bad dreams.
Running their
They're like
dreams.
running and everything like that. Okay, I am going to switch over to the charts here. So this is what Dave and I are talking about is like we are seeing levels of what we consider to be exhaustion. This is a fairly classic pattern where we come out super strong off the bottom, we get what's called thick in the middle, and we can verify that just by the amount of energy at the weekly chart, and then that comes out again, into what we call the parabolic tail. So we have a classic S-shaped curve for this market, and now we're at levels where it's an extreme liability right now.
Mm.
That every time, in fact, what Dave was saying, this is the uh, over the past however many years. Well, going all the way back to 2017, which
That's
was
at least 5 years. Yeah.
ironically also Trump's first year of his first term. Okay, and so we got into the same level of exhaustion here, and then it just kept on going. We had a little bit of volatility, and then just when everybody expected it to go away, we got one
Mhm.
final burst to the upside, and
It literally charged itself back up
it did
on the
charge
fly.
itself back up on the fly. So that can happen, but it has to go at a much slower
Slower
rate
pace.
than what we've seen over the past couple of months. So I hate to be one of these guys saying, well, this is not sustainable. This is not,
Mhm.
because what I've learned is the people that are saying that, well, this is overbought, this is not sustainable, are the folks that are getting run over and have been getting run over for the past 20 years that I've done this. So I never want to attach my own sense of worth or merit to a market. We always want to go by the numbers and by the studies and whatever. And that's the problem that I have right now is that going by the studies shows that we're in an area where we should expect to see some pretty big volatility from this. Not necessarily a crash or anything like that, just a transition into some heavy volatility. And so we're kind of waiting for that to happen. We have exhaustion on multiple levels at this
Mhm.
point, and but there's no real catalyst to cause this to happen. So a lot of times what happens is something will come out of left field that nobody's talking about, nobody
Yep.
has any idea about, and this is what we truly call the exogenous event. So we very well could just continue grinding into the next couple of months to the upside while everybody just sits there and laments the wall of worry. But at some point, we are going to pay for this. And so I think what I'm going to be doing is, as we get into the end of the year, I'm going to be continuing to sell into strength, take profits, raise capital, and really set myself up for the next move, which probably will be deeper than we expected to,
Hmm.
because when your only pullbacks that you have along the way are 3%, and this is what we went through back in, oh gosh, let's see if I can bring this up here. We went through something similar to this in this whole period of time here. So this whole period from the '03 bottom all the way up through the highs in 2007, we didn't have more than maybe a 6% pullback along the way. 6%, that was it. And then all of a sudden, it goes 10%, 20%, and a lot more than that. So, those were kind of this is the NDX actually. But when you finally throw in the towel and say, well, this thing is never going to pull back again, that's typically when you get the overreaction to it.
Watch for structural change. That's the key. So structural change in how things are, again, example of that is Fed going from ZERP to raising rates. That's a structural change. Fed going from raising rates to cutting rates, structural change. So look for bigger structural change. That usually is the beginning of your next catalyst. So I think there's a lot underpinning of like macro data that is out there, right? Car delinquencies at all-time highs, things like that that are, you know, uh, higher than 2008. The housing market's not budging. All those things are like big, like think of like a cruise ship, takes forever to move and turn and all that stuff. So you start seeing a lot of that way before anything happens in the future. It's like sometimes a year before you start seeing the kind of the cracks in the armor start to happen and everything, right? So, that's one thing I pay a lot of attention to the macro stuff just as a way to understand what could potentially happen in the future and what those trends look like, because ultimately, an economy like ours that's based on 70% consumer spending, if like, did you see Chipotle over the after earnings?
No, I
Like,
did
pull
not.
up the chart of Chipotle real quick. Um, and that move was based on, you know, the guidance from Chipotle showing that customers are slowing down a little bit. And then look at how bad that company got punished, for that, right? So, and it took a lot of others with it. And so like that's like a sign too, like, you know, Chipotle is getting too expensive for people, right? We've seen McDonald's CEO say there's a two-tiered economy, right? And that sort of thing. So these are all like precursors to the bigger event that happens long down the road. It has to build up until it just cannot be it just can't be hidden anymore, or it can't be papered over anymore, right? In fact, what was it? Michael Beery was tweeting last week or Xing or whatever it's called now, posting about how basically like he would love to put money to work and do the next big short and everything, but um, what was it like? There's sometimes you trade, sometimes there's not to trade, and there's sometimes you just can't do anything, so you don't. It was something like that, but the whole point is like we're in a different world where we've got this massive backstop of government, Fed. I mean, COVID's a great example of just injecting liquidity, right, into things anytime something goes bad. And so we didn't have that. Remember, we didn't have any of that stuff for 2007, 2008. There was no QE. There was no buying and basically the bonds and all that type of stuff. Now that's institutionalized and normal stuff. So it's really hard to just have a crash like that because the powers that be step in, and that's kind of what Beery's was saying, right?
The funny
So
thing about that was back in 2008. a lot of the volatility came around Congress trying to get involved with saving the market, and
Yep.
so they first they negated it, and then finally they did vote on and brought in TARP, if you remember TARP,
Hmm.
and
Yep.
the moment that they passed the bill, it crashed. That was about the worst of it right there, because
Yeah.
that's the market saying, "Oh, crap."
Well, you
So
hear a lot now.
yeah,
You hear a lot now about repos and reverse repos and all that stuff. Like nobody knew about that back then, but one of the big catalysts back then was like 500 million disappeared from money market accounts overnight. So liquidity was like gone, and like
yeah.
so there wasn't something for like the whole repo stuff. That's why when you see these guys talking about repos down to zero, and they're like, like they're watching for that liquidity issue for banks effectively, and that's where like it's a lot more visible now. Nobody even knew what that was back then.
Yeah.
It's just, and so that's what you're watching. And there's some issues in the repo markets. There was I think it was like 25 billion over the weekend had to be put in by the Fed. So again, these are all things underpinning macro level, but it's always a long time before anything really goes down.
So Dave, what do you find is working now for you?
Right now in this market, still, long-term cash secured puts or put spreads out, typically 10 to 15 delta, 3 to 6 months out. Um, those are working well. Very passive trading. Um, Short-term iron condors. So I've got a strategy that I call 50/50. Those are 10 to 15 days out. Very like the whole point of those is to get a 2% return on risk, 2% return on risk, and just stack them up and get those. Those are working well. Short term right now, like 5 day iron condors, you're doing that too.
Hmm.
And this is all selling. And then wheel on stocks that have nice uptrends above their 200-day. Those are working. And then you and I've been doing some good leaps trades, being very picky and choosy, finding stocks that have exhausted out, lower Bollinger Band, turning, getting ready to run, and then doing some good leaps calls trades. Those seem to be the ones that seem to be pretty consistent right now. So,
Yeah, I'm going to do something a little bit more reckless than I usually do. I've got a Palantir, what's called a call diagonal, or some people know it as a poor man's covered call, where you have
yep.
a long-term call option
Hmm.
that's deep in the money, so you don't have as many unintended cons. So it sort of acts like 100 shares of stock, but it's
Yep.
cheaper. And then on a monthly basis, we're selling some premium out of the money on the calls, and I'm way up on the trade right now. Earnings are coming tonight, so
I know.
but I love the chart. I love their
Hmm.
business model. I love how they're being led. I am going to hold over them. This is the first time I've held over earnings in like years. So we'll find out if that is if that is a
Maybe
good.
sell the news, but we've seen like usually Meta crushes it and they got just killed.
Yeah.
Meta's one that I'm looking at for that same type of scenario. I want to see it get back over its 200-day first though. Um, but there are some good opportunities out there if you do know how to read the energies and know how to really define levels of support and stuff and are patient. I said to my students this last weekend, patience over the next few weeks is most important because this thing's going to get charged back up and it's going to decide where to go. In fact, we talked about it last week and it's still really it's gone down some, but it really hasn't. The move hasn't happened yet. The Russell. So why don't you pull up the chart on the Russell because that weekly chart is insane. The daily chart's been waffling around like 30, 40 point range, but gosh, the weekly chart is just uh, highest charged I've seen in years.
Yeah, look at that, 69. Um,
Yeah, it's
yeah, so
just
we have this is where we got different time frames doing different things. So we have the shorter time frames saying, I've got a lot of energy, I've got a lot of potential, I can move in either direction. And then the monthly chart says, I'm
hmm.
pretty tired right now.
Yep.
So we have seen in the past, now Dave brings us up is the Russell being a canary in the coal mine. Like here was
Hmm.
one of the better signals that we had from the Russell was back at the end of 21. It jumped
Mm-hmm.
into new highs and immediately sold off right after that. So somebody pushed it up to sell it off. And right
Yep.
after that came our little bear market. So that was the Russell can be a leading indicator. The last 3 years, the
And
Russell's
look how
been
many months, though. Look how many months it was before it moved. How many months it sat there just like flagging pattern looking before that spike up? It was like 6 months of going nowhere.
that was almost a year, Dave. That
Yeah.
was almost all of 21. It
Yep.
went nowhere because most of the rally came on the post COVID move in 20,
Hmm.
and it kept on going while the rest of the markets were having shake and bake back in September, October. The Russell kept on going, and then it paid for that because that
Hmm.
exhaustion level, it paid for that throughout all of 21. And then finally, when it broke out, see, this is normally when you have a move like this, the implied move is to the upside, right? That's a continuation pattern. And
Hmm.
so that continuation turned into a reversal, and that was our leading indicator for this. Right now, I don't see a leading indicator on the Russell, which is anything contrarian, other than let's watch and see where this, like what Dave is saying, watch and see where this energy goes. Does it go to the upside or to the
Hmm.
downside from here?
And think about what the difference was as you got into 22 with the Russell. What happened?
Oh yeah, interest rates going higher, and these are all
Structural change.
these are all
And what
finance.
stocks are most sensitive to rates?
Yeah, the small
Russell.
caps, they're all financed by interest.
Now you have the opposite happening, a structural change back the other way. I don't care what Powell said the other day about he looked like an idiot. I mean, oh,
Well,
we don't have to do anything in December. We're not doing it. Nobody said like, come on. I
all
mean,
of this
you
all of
know,
this move was based on that occurring.
yeah.
So that
So
was already priced in, and so the question is there anything left on this bone for the Russell?
yeah, and that's where that weekly. I mean, that daily's still in the 50s. It hasn't really gone anywhere yet. So that weekly, if that weekly goes, and again, if it starts ahead of the rest of the market, there's your canary. That's your probably your big run before that monthly comes into play. But again, if you look back at 21, what did it do? It was an exhaustion for an entire year. It went nowhere. Didn't have a massive correction. It had some corrective action, but it just went nowhere. It definitely
Yep.
changed character. That's a big change in character. But it didn't fall off a cliff just because the monthly was exhausted. It doesn't have to do that. Markets don't have to do that.
Take a
So,
quick look
um,
at gold here for see
yeah.
what gold is doing. So we've had our little move off of the parabolic high, and what
Hmm.
I'm looking for is any kind of is this going to be a complex corrective, or is this just going to be a slingshot move here? And my vote would be towards more of a complex corrective.
Yeah.
This is whenever you have what's called a parabolic move like this, you have uh, what's called a hairy back on the backside of this thing. So it's usually kind of nasty because what happens is if you think through the psychology of this move, everybody's like chasing this, chasing this, chasing this. And then a pullback comes along and everybody's like, oh, great, a pullback. And so they buy the
Hmm.
pullback and then they get taken underwater. They buy the pullback, they get taken underwater. So
Yeah, I still say
little,
my magic number here is 330. Getting back to around 330 would be my point where I'd probably start selling deep out of the money on it.
yeah, and what's kind of wild with this is that there's very little money in selling premium on the
Yep.
GLD because there's so much. First of all, there's no implied volatility at all, 23%. A lot
Yep.
of the stocks that we're looking at, like if we look at something like um, a Tesla sitting at 72% for
Hmm.
this week's options, or
Put in
65.
Palantir. Put in Palantir. You wonder why you're doing so well. Look at that one.
So Palantir is at 60 to 80%.
Mhm.
And so the GLD has got nothing right now. So if we go out even 46 days here, if we go out one standard deviation and say like, okay, so we're going to sell like a 16 delta, you're not even getting 1%. So you're going to sell a 347 put and you're going to make $235 from that. You're going to bring in, which is nowhere near 1%.
Not worth it.
So
Yeah.
that to me is always my barometer. I won't do anything like this unless I can make at least 1%.
That's why it needs to correct further and get that IV up.
Yeah, but it may just not do it. So a lot of times what you can look at is you can look at the skew of something and say, okay, if we go equidistant, so if we go like 10 points out of the money, we're selling $5 puts here. If we go 10 points further out here, look at this, you still have a massive amount of call skew. Look at that. People are still buying call options. So right now, what makes more sense is to do, if you think this is the bottom, you do a buy right. You just go ahead and buy, your shares, and then you write the premium. This is what I had to do with Bitcoin a year ago. Bitcoin, it made no sense to sell puts on Bitcoin a year ago because they just released the options on the IBIT. In fact, I should bring that up now.
Yeah, I mean, we should talk crypto a little bit because it's still in a range, but it's interesting action.
So last year at this time, we were looking at this kind of move, and selling puts against it would have been the wrong move. Buying the shares and doing a buy right, that was the correct move on this because you had so much skew, there's so much premium in the call options. So to sell them instead of buying them, actually what would have been great was just to buy calls actually. But we're this is what we do. We sell options, we put the odds in our favor. But today, what I'm seeing today, if we go back over the last year, so since last November, this is what's called a point of control, is 96,000. So basically, half of the volume is below, half of the volume is above that level. And what you learn is that the price will run into what's called value areas. So we're right down at the bottom of one of these value areas, which is around 105 or something like that. So we're just pushing, trying to pick the scab off of all these pikers that have jumped on board. And once they leave, then what you'll find is that the price will probably lift. Now, one thing I'm looking for is if we have to drop down into the next value area down here, there's a confluence of support, which is down here at the value area, as well as if we look out to the weekly chart, we can see a pretty clear trend line here. So if this thing does need to puke all the way down here to 96, that's kind of the line of death here, the old line of death that we talked about with Libya, years and years ago, where either this is going to rebound off of there and slingshot like crazy, similar to these moves that we had. So we should see something similar to that. If it doesn't, or if it pops up weekly to a lower high, then this bull is over in crypto. And so it's been going on for 2 years now, and it still looks like it has some left. I'm not giving up on it yet. But this is kind of the last line of defense for the bulls at this point is about 96. So if you have anything on there, let's see. BTC.
Yeah, I mean, that's a pattern that it's continued. It hasn't gotten down that far, so we'll see if it gets down that far.
Yeah, so I'm just, trying to stay ahead of it. Now, Ethereum, ETH here, we've pulled back down into the pattern, which is not great. So anytime you see a breakout above a specific, like a big value area like this, anytime you see a breakout which fails, that's not a great sign. I'll put a big sad face here. Usually that's a bad sign. You want to see support coming in right around that level it's common to see a retest of the breakout, but it's not good to see it pulling back down. So you can see there's kind of a big, wide, sloppy value area here. And the major support comes in around 2000. So hopefully this thing is not going to eat it all the way down to 2000 or so. So support should come in at these levels. And if it doesn't, then this could be the leading signal But look how bad everything else is getting eaten up today. Like down 10, 11, 12% today, and BTC is only down 3%, right? So this is
Mm-hmm.
I've been telling everybody, don't go for the alts yet, because everybody loves to buy the cheap altcoins, but it's just not time yet for this. Let this work itself out, and then eventually Bitcoin will be the first to rally, and then the alts will follow after that if this is still a valid bull. Okay, so that's
Yeah,
an answer there for Frisky Anthony. Thanks for your question. Oh,
we're
we're
on
about out
time.
of time here, guys.
Yeah.
So um, thanks for listening for us today. Nothing else magic for this week. So watch the election tomorrow for any
It's
clues.
just,
Watch for any clues in terms of government, reopening.
yeah.
That will bring some certainty. And other than that, just watch, like Dave says, watch for structural changes.
Yeah, it's just short-term patience right now over the next 7 to 10 days. Let this thing kind of show its hand. That's the hardest thing to do. So, um, just let it do what it needs to do, and then see what trend it gives you, and then take advantage either way. That's the wonderful thing about selling options. There's opportunity on any side. So,
Just make sure that you have, on almost on a daily basis, write down what will you do if the price goes higher, what will you do if the price goes lower, what will you do if the price goes sideways. Have that mapped out so you don't have to figure it out live.
yep.
Because if your only directive is like, well, gee, I hope it goes higher, what happens is the brain short circuits if it starts going lower. You just, like, you put the blinders on and you just shut off your machine and you hope it goes higher. That is not a recipe. We've all done that. That is not a good recipe for success. So, okay,
Awesome.
guys, thanks
All right, guys.
everybody. We'll
Thank
see you
you.
next Monday. Adios.
All right.